Hello, everybody, and thank you for joining us. This is episode 7 of Blueprint for Closers. Today, we are joined with my co-host, Dominic Ciccarelli, and Russel Nova, principal at the Cornerstone Group. Today's going to be a really exciting episode where we're going to really focus on commercial mortgages, and Russell is just the man to teach us about those.
Yeah, I was very excited about today because everyone's talking interest rates. But the big swing in rates was really on the residential side. You know, although rates went up on the commercial side, I think there's a lot of misunderstandings of really what's happening. So we're hoping today to get a lot of information from you, hear about some of your experiences, some of the deals you're doing, obviously learn about your company. And thanks for coming in, man. We appreciate it.
Absolutely, man. Thanks a lot for having us. It's actually very good to see you guys. And we actually worked together for a long time. You guys are doing amazing things. So thanks a lot for having me.
Thank you. Tell us a little bit about, where you came from and kind of how you got into the commercial financing world.
Well, yeah. So, I started in the residential business like anybody else would, right? So we've done a lot of residential loans. I started back in 2006 when it was the Wild Wild West, right? You could have done any loan. You could have been anybody and you could have gotten a home back in the day. It was great, right? So I started back when I was 18 years old, from 2006 to like 2005 to 2008, right as soon as the market went down. I was doing I kid you not, I was doing about 20 loans a month at the age of 18, 17 years old. Loving it, right? As soon as the market went down, I went from doing 15 to 20 loans a month to doing one loan.
Yeah.
So it was a change. It was a change of lifestyle, and I was always energetic. I was always I had that hustler, mentality. Like I wanted to do more. Like I wanted to do great things, right? So I went from doing 20 to 1, and I'm like, okay, something's off here. Let me do something else. Right. So I took a year off, really, just to kind of, get myself together. And then in 2010, me and Igor decided to come together and say, hey, listen, we've been doing this together for a very long time. Let's think of something else. Let's do commercial. All right, we know nothing about it, but let's try it. Yeah. And then boom, in 2010, Cornerstone Capital was formed with me and my partner, which was Igor Zak, which is our operation officer, and he's literally the lifeline of the company right now.
I feel like it's funny because all of us got started around the same time. In 2004 is when I really started my firm, and same thing, real estate market's going crazy. We're being hired every day. Roof raisers, builders. The market was just. Listen, it was an unbelievable time. Economy was booming. People were spending money, and I was put in front of so many people. And then, literally within a couple of days, that 2008 crash, you go from your phone ringing off the hook to just crickets. You're like, was I living in a fairy tale land the last couple of years? Like, is this not how normal life is? Because we were all, you get accustomed to just rocking and rolling every day. You're getting up, working hard, and things coming a little bit easier than maybe they should. So I think, listen, everyone felt the pain of that 2008 crash, and it's always interesting to hear stories on how people reset and they're like, okay, let's refocus and go at this again. So I love that you got back in the game.
Oh yeah.
That's so spot on what you just said. People keep asking me constantly, what's the market like? Right? How's it going? I'm like, you hit it right on the head where you said, money seems like it's coming a little easier. I just feel like right now it's just hard money. Every single deal is hard. It's not to say certain dollars weren't earned, but it's just every single one has got hair. Every single one has got difficulties, and it's just the hardest time I can remember.
Right now, it's not the time. It's not the time to sit back. Right now, you got to work a little bit harder than you would. Right now is the time when you get into the office and you pick up the phone. If you're accustomed to doing 10, 15 calls a day, then you do 30 calls a day, right? Yeah. If you're accustomed to knocking on doors, if you're going to go walk around and you're going to meet these realtors and you're meeting 5 or 10 a day, no, you're going to meet 25 a day now, right? Yeah. So you got to do a little bit more than you would used to do, right? It's like a farmer, right? He plants his seeds in the winter, so in the summer. I was just
going to say it, man.
Everything just comes together, right? Everything just blossoms, right? It's the same exact thing right now. Right now, we're in a tough situation. It's you still doing quality business, but it's just a bit more harder than it used to be. But that's okay. Mm-hmm. It's totally fine because you're doing it now. And once you're there, in about 2 to 3 years, you're going to see, okay, I did that. I built that. I put that together. I made those calls.
That's right. So to echo what you're saying, and I'm a big believer in this, right? A lot of guys, and let's talk about mortgage guys for a second, because that's what you are, right? The space you're in. When you see, listen, if you're in this business long enough, you know that this is a trend. You know it's going to come back down. And even when you're busy, if you're not planting those seeds, you're making a mistake. even when you're busy, if you're not saving that money, if you're not saving for a rainy day, if you're just blowing it, you're buying those fancy cars, you're buying the artwork, and you're just coasting, thinking it's gonna last forever. It's the kiss of death.
And not buying real estate. So I see so many.
And not buying real estate.
That's another story, dude.
So it doesn't. So for me,
that's another story, man.
I'm in business 20 years now. It doesn't matter if the days I'm busy or days I'm slow. I'm planting those seeds. I'm not gonna take. I'm busy today, so I'm gonna go to the beach. I'm set. No, you got to get up and work hard, whether you're busy or whether you're slow. A big believer in this and just everyday planting seeds. But go ahead. Sorry.
No. I was going to say, you're 100% right, and I feel like I speak to a lot of people every single day, right? So I speak to real estate brokers, bankers, residential bankers, commercial bankers, banks. I mean, we're aligned with over 100 different banks. So I understand what every single lender has, and what we as an organization, when we get a deal, we know exactly what lender is actually going to look at it. But I got to say, the people that have the most advantage, the highest advantage in today's market are realtors. I'm going to tell you why, right? The reason is because these guys see these deals firsthand, right? Before any of the consumers see it, they understand it. The problem is with these realtors sometimes, not all of them, there is a small percentage, but there's a higher percentage of realtors not understanding the beauty that they have. A lot of them are not financially literate, right?
They don't leverage the deals.
Yeah. They don't leverage the deals, and they don't understand what they have. They look at this as a job rather than looking at this as an opportunity, right? When they have these type of deals, they're looking, okay, how do I close this deal? How do I go on to the next? How do I close this deal? How do I go on to the next? But you have to understand, money has to work for you. So when I speak to these realtors, and I speak to a lot of them because I want to give them value, I want to show them that, hey, listen, you have something in front of you. Learn what you have, analyze what you have. Possibly you can buy that deal. Let me finance it for you, but you can buy that deal and build your portfolio. But all they're looking at it's just the next thing. How do I close on this deal?
Short-minded. Yeah.
And you know what? And I get upset because, and I try to teach them, it's like, hey, get outside of that shell. This is not a job. You're seeing these deals firsthand. You got to be able to look at it and say, this is a good deal. Maybe I want to put it together. Because if you're not doing it, if you're not investing, or if you're not making moves, then you're dying.
Guys like us don't have pensions. We don't, unless we create our own 401k, we don't have medical for life. We got to put away half of what we make minimum for the future.
A lot of them don't. The one thing that I will say, though, is and I don't know if I imagine it's similar in your business, but, I'm hearing it from like true talented realtors, guys that are real hustlers. They're actually excited about this market. I partially am as well, because I can actually get back to a business plan. The last couple of years have just been the wild, wild west in the sense of things have not made sense. These bidding wars that just don't make any sense. Now I'm actually finally doing my job and really providing value. And the one thing I'm very excited about is, for example, when negotiating a deal, and this is really where you step in. So the price. I have a deal. My last 3 deals, price was weeks ago. We're really getting into terms, and that's I'm back to doing my job, and that's it just got so crazy where it was just everything was just price, and the banks were lending, everybody was in a good state liquidity wise, and now we could actually provide value. And that's where all these different lenders, I think, come in, and like what really, it's not just about rate. It's not just about timing. There's a lot of factors, whether it's recourse, non-recourse, all these different things. So
when you're in a booming economy, everyone gets into it, right? So when the stock market's going crazy, everyone's in the market.
Correct.
Real estate market's going crazy, crypto is going crazy. All of a sudden, everyone's a Bitcoin specialist, right? When these times come down, you see who the real pros are and the people that know what they're doing, and they bring the quality to it. When the real estate market's going crazy, every single wife of my friend became a real estate agent. Why? Because there's easy money, but they don't have the backbone of it. They don't have the education behind it. They don't know how it's really structured. It's just, the real estate was flying off the shelf. And that's where you can get into a lot of trouble, and people buy homes that they probably shouldn't have bought, and, things go wrong.
I'm going to piggyback off of what you said, but I want to kind of say that, yes, nowadays you have to work for your money.
Yeah.
Nowadays you have to actually do the work, because it's not as easy as it used to be. Now, to piggyback off of what you said, back in the day, you're right. 3 years ago, you're buying stuff at a 2 cap, at a 3 cap, and it didn't matter because everyone was doing it. It was the craziest thing. And it was cheap money. I mean, how are you not going to buy at a 3 cap or a 2 cap when you're getting a 3% from the bank?
All right.
I physically got a 3% from the bank. I physically got a 2.25% from a bank. So I'm buying at a 2 or 3 cap rate. It made sense.
Yeah.
Nowadays, right? Like, for example, when you're going out and you're pitching a deal for a client, or you're trying to get the seller to understand, like, hey, your property's not worth a 5 cap. It's just not. And I'm going to explain to you why. Because the cost of capital is at 8.5% to 9%. So how is my client going to pay you a 5 cap when the rates are at 8.5% or 9%? It doesn't make sense.
Right.
So this is where, you know, realtors and negotiations actually come in. This is where sellers need to realize that their product or their property is not worth what it is, because the banks are not giving you what they would used to give to you, you know, back in the day.
So why don't we roll into exactly, you know, what you do, right? Because commercial financing or a commercial mortgage broker, I mean, to me, it's a very, very broad term, right?
Correct.
So what separates you from everyone else? Tell us some of the types of lending you do. You know, tell us about maybe some exciting, you know, the bigger deals you've done. I know you've done, you know, 20+ million deals, 30+ million deals. So what do you guys do as a company that's different from everyone else?
Yeah, look, I mean, I'd say like this. We're a very modest, you know, company. We're a boutique shop, right? So we have about 15 guys in the office. We're Cornerstone Capital. I'm one of the principals at Cornerstone Capital. From the company in 2010. Last year we did roughly about 180 loans, so it averaged about like 750 million worth of worth of value, not dollar amounts. Otherwise, I wouldn't be here, right? I wouldn't be sitting here, right? But it's actual volume, right? And what makes us unique is really, I know people say that, but it's really about customer service today, right? You have to provide a value. Because if you're not providing a value, they'll take their stuff and they'll try to go to the bank. Some will fail, some won't, but you don't want to lose out on that client. So
ongoing topic in every podcast, right? Providing customer service, the value. No one's even talking about what they do. It's so funny that, you know, we were talking about with Jude, the insurance goat. I mean, we couldn't have spoke more about, you know, the client experience and bringing value to the customer, gaining their trust, showing you're a professional, and then the deals just come.
Correct. And it's not only the clientele, right? It's not only the consumer, which is the end product, which is the end buyer. It's also residential bankers. Like, we form partnerships with residential bankers, not the actual banks itself, but like mortgage brokers, right? But on the residential side. And the kind of quality that we're bringing to them is the fact that we're saying never say no to business. So when businesses come in their way, they don't know much about commercial. But what we're doing is we're creating educational seminars for many of these residential bankers and teaching them everything to be financially literate, as I mentioned to you earlier, on how to size things up and how to look at commercial deals to never say no to business. Because it's not just the end consumer. It's also the residential banker, which is working with the realtor, which is then working with the client. So we want to bring that value. And I keep on mentioning value because it's so important, because there are so many of us. There's so many of us, right? You have all these other companies that are doing the same thing because they thought it was easy money, right? And it was easy to do. So we have to be strategic and we have to be different. So we're kind of working the market here, and we work with this great company that we just got online with. You know, shout outs to Clifco Mortgage Bankers. These guys are amazing individuals. One of my dear friends now, you know, he took over the bank and he's working on there, and we're working with like over 350 of their residential bankers, bringing value. And I take time out of my day, and I don't care about that. That's very important to me. And I literally, you know, speak to each and every one of those guys. I teach them. I look over everything. We have a system. We have a process. And it's really about that. It's about being strategic and bringing value. And that's what I believe in.
Love it.
So
we're going to get into some detail and type of products you offer, right? But a big question a lot of people come to me with is, what's a main difference between a residential mortgage and a commercial mortgage is, a lot of times, you know, after 5 years, you have to refinance and get out of that deal or reevaluate the deal with the bank. 5 years ago, interest rates were much cheaper, and a lot of these commercial deals are being forced to refinance. The deal barely made sense 5 years ago, or maybe they were just making a couple bucks. What people are saying is, when they now refinance into this higher rate, a lot of deals are going to be upside down.
I love it. I love it. You're absolutely right.
So what's happening, and what's the bank's perspective on these deals? Because people are going to lose property.
So here's the thing. People are already losing property. It's happening. The problem is that your underwriting needs to be keen. Your underwriting needs to be spot on. Even nowadays, because banks have made these type of mistakes, where they were just leveraging about 75 to 80%, keep in mind, the blame goes on the banks. It's not on the consumer. It's not on the buyer who's buying a property, a multifamily property. He went for a 75, 80% loan. The numbers work. But guess what? The rate shot up. You don't have a rate cap. You don't have anything to secure you when everything is going up. So what happens is, towards the end, once the rate expires and once the loan is due, the bank will then come to you and say, hey, listen, it doesn't work. Either sell the property or invest more money into the deal. So a lot of times come up with capital. So a lot of times I'm personally seeing it right now, and I'm doing a lot of bridge loans to get out of that loan because it just doesn't work, because people don't have capital laying around. People don't. We were just discussing it. Yeah. Who's going to have $1 million or $2 million ready to go?
That's right.
But it happens.
What is that? Give me an example of what that looks like. Like a shopping center, what?
Okay, so for example,
a real example.
Fine. So like a real example, working on a deal, right? Individual got a 3.5% rate, right? So he has 75 LTV.
What kind of asset?
It's a multifamily property, large multifamily property, 125 units to be exact. Okay. Has 125 units, has a 3.5% on it, fixed for 5 years, 75 LTV.
Is he making money?
It makes very good money, but it's a bridge loan.
Okay.
So at the end of those 3 years, because it's a bridge loan, or at the end of 5 years, your loan is going to reset to the current market, which is 8.5%. There's not enough cushion there. There's no way that it can actually work because you're at 75. So the bank has two choices, right? They could either ask you to sell politely, okay, or ask you to come in with more capital. So you have to be ready for those type of things. It's happening every day, and that's the issue. And that's the issue of why banks these days are no longer doing 75 to 80%.
Right.
It is now 55 to 65%.
How long can you still play the bank before they really reset that note?
You got to make sure you're making your payments. You cannot be past 30 days because then they do it. I personally know some folks that were in a very, very bad position. But you have up to like 4 to 5 months before they really put something on you.
So my 3 years lapses or my 5 years lapse, whatever type of mortgage I'm in.
Yep.
I'm making my payments.
Yep.
I'm squeaking by. I can stretch this 5-6 months before. What happens? You got to start. One day you just get a statement in the mail. It's 8.5%.
Absolutely, but you have to start the process way before. So I don't expect any smart investor to only start the process towards the end. You're starting the process a year ahead of time, right? So when you already realize that's happening.
Yeah, but you and I both know those guys aren't doing that. They just pretend like they don't have the problem. They pretend like that doesn't exist, and like, oh, when the bank grabs it, they grab me.
Most of the seasoned guys are, they're looking.
They're looking, but here's the thing, guys. I want you to understand one thing: banks are not owners. Right. Banks are not real estate guys, so it's very easy for them if they don't care about you or they don't have a relationship with you. It is very easy for them to sell your note, where that 3.5 will then turn into 8.5, which will, as soon as they sell the note, will then turn into 24%. The moment they sell that note, it's 24%, and they have every right in their loan docs to sell that note to 24%.
So wow. How about, have you seen any banks, especially banks that maybe wrote something at 3, call it 4% a year and a half ago, right? Have you seen, if you read some of these loan documents, you could default anybody. You could find something. Have you seen any banks go in and try to look to default people? Look to call notes and raise rates? I've heard of this. I don't know if it's actually happening.
You know what? You have to be a sleazeball to do something like that, right? At the end of the day, the bank's business is to collect interest. If you're paying the mortgage and you're doing everything, don't forget there are triggers in the loan doc that requires a rebalance test, for example, right? So every year they do a rebalance test to make sure that you're cash flowing, to make sure that you're rebalancing on
every
the
year. You
current
have to submit personal financial statements to make sure you still.
It's annoying. Water. It's annoying, but it's in your loan docs, and if you don't follow, you could prolong it a month or 2 or 3 or 4, but that letter is coming.
Yeah.
And that says, hey, we need to do a rebalance test. You better send me your documents, otherwise we're going to default you. We have every right to do so. So, if you're a sleazeball, if you're not making your payments, if you're not taking care of your property, if they'll come by your property to do some sort of site, an actual site review test, and they don't like what they see, they can move on it. But at the end of the day, they're not owners. They want to collect the interest. So just work with them and be a good human being.
Unrelated to real estate, but related to banking, I have a friend that was behind a few months on a boat payment. He says it was a large boat. And he says, okay, you know what? I can't afford this boat anymore. I'm going to sell it. He was behind maybe 3 or 4 months. He sends the boat to my buddy to sell it, a legitimate boat marina sales company. The day he puts it, 2 days after he put the boat on the market to sell it, they get a phone call from the bank. They show up at the marina and rip the boat out. but it's just showing you a sign of the times where everyone's watching everything. These banks want to protect their money. They want to protect their assets. They saw the guy was behind 4 or 5 months. All right, let's see what's going to happen with this guy. Maybe they were looking, like you said, they'll come by the property. They saw the boat wasn't in the marina where he kept it, or maybe his house. They looked, they see it on the market, went out, and the marina was like 80 miles from the guy's house.
Well, how about these
Ripped it out.
SBA and EIDL loans everyone was using to buy cars?
Yeah.
Dude,
Nuts.
that's another story. I mean, that's another story. You're gonna have people doing things like that, but it's not the proper way to do things. You can't do that.
Yeah.
And we're in a time where transparency is key.
Technology alone, everyone sees everything.
Yeah.
I mean, you heard about that, I don't want to name what specifics, but there's a whole bunch of, realtors and bankers, whatever the case is, in Florida. They got their EIDL on, and then you see them riding around in Bentleys.
Right.
And all of a sudden, hold on a second, how'd you do that?
Yeah.
How'd you get that? And then they actually found out that, they're using those funds to buy Bentleys.
Unbelievable. Okay, let's go back to the products. I mean, us three together is dangerous because we can talk about this topic forever, right?
Yeah.
Yeah, we enjoy that.
You're spot on. Trends, right?
Right. So if I have a commercial deal right now,
Okay.
I have good credit. I'm not defaulting anything. Okay, what are some products? Call it a 10-family house, right?
Okay.
If I come in your door and say, hey, I have this 10-family house, I need a mortgage, what products would you suggest to me?
So there's a 5-year interest-only product right now, right? Like anything else, right? If your property is cash flowing, there's no need for you to pay principal. There are a lot of lenders right now, because when you're buying a property, you're also looking at the market appreciation. You wanna buy a property knowing that you could increase the value. How do you increase value, right? You put in the renovations into the property, you lease up the property, you increase the rents.
Mm-hmm.
So a lot of lenders right now are offering interest only, but you got to put some money down. So you're looking at roughly, as mentioned earlier, you're looking at like 55 to 65%. But who cares? You're investing into your own property. Your money's working for you. You're investing in there.
Mm-hmm.
It's not out there. It's making money.
Yeah.
So
IO.
That's an IO product. So it's an interest only product. Right. So you're making the mortgage payments, you're increasing rent, you're putting more cash into your pocket.
Right.
Once the valuation goes up, guess what? You can refinance right back with that lender and get more funds.
If you're a responsible conservative investor, I'm a big believer in the IO program.
I like the IO product.
I wasn't, but I think I do now. What kind of interest rates, what's how much better is an interest rate by going IO, if at all?
In today's market?
Amortization?
So if we're talking about in today's market, like right now, right now you're looking at roughly about a 7%.
Wow.
Right now, today, which in all reality isn't that bad.
It's not that bad.
And I'll tell you the difference.
Yeah.
Okay.
Of why that's not bad. Now, if you have a residential property, horrible, 7%.
Yeah.
Hurts. But if you have a commercial property at 7%, I'll take 2 of those.
Yeah.
Right? And the reason is because I'm sure you're hearing this whole thing. What is it? Date the mortgage and marry the home I'm hearing this right now from a lot of residential guys, right?
Mm-hmm.
What is that?
Date the mortgage, but marry the home.
What's the third one?
It was something.
Because the mortgage you can refinance.
It was something like that. I hear it all the time.
You can swap out the mortgage.
Yeah, you know what it is. I'm hearing it a lot, and I get it. And I feel lots of pain for a lot of my residential partners and a lot of my bankers, because a 7% or a 7.5% or 8%, if you look at the rates right now, they're high. I mean, how does someone do that? I mean, it's tough.
It's tough.
So, as you know, when you're dating somebody, right?
Mm-hmm.
When you're first dating somebody, they're expensive.
Mm-hmm.
Especially if that girl likes expensive stuff. you're gonna spend a lot, right? But if you're buying a commercial property, right? Let's just say you're dating the commercial property. That commercial property is giving you income. It's paying you. You're not paying that. So there's a difference between buying a property that's a single family and not producing any cash flow, because you got to front all that money and refinancing later, rather than buying a commercial property, paying 7%, but that property's paying you dividends.
Yep.
That's the difference.
It is, right? But now I'm going to give you the realtor side.
Go ahead.
Tremendous disparity still between sellers and buyers. Tremendous disparity.
100%.
On the residential side or all around?
100%.
I go to sellers constantly, go to listing appointments. I mean, I just had a multifamily deal. Great example. 16 family. We went through all the numbers, right? And we come up with essentially an asking price of $3 million. It would have sold for $2,728 a year ago, no problem. Figured I had a buyer that's shopping financing. The best loan he could find is $1.2 million on it.
Exactly my point.
And I went back to the seller, had the conversation. No, maybe I would take 2.728, but like there hasn't been a need to sell per se. I just haven't seen a lot of it yet. Maybe those loans are coming up, and that's when there'll be that need. But I mean, just big disparity still. There hasn't been enough of a reason for people to sell, especially. I mean, going back to residential, I'm concerned with the residential market because I think the only thing that could really change it is maybe massive layoffs, because all those people that refinanced or bought the last couple of years, they're just not going to go anywhere.
That's right.
But unless they have to.
Mm-hmm.
So the issue also is the fact that sellers can't understand and they can't fathom the fact that their property is not worth what it used to be worth. Right. So at the end of the day, you can give them whatever you want, but they're still not going to agree to selling their property at a lesser value unless they're forced to, like you said, unless they're forced to. Like I negotiate properties all day. Like we buy properties ourselves as well.
Mm-hmm.
And it takes me like 3 to 4 months to really explain to somebody why their property is not worth. You can go back and forth 100 times, back and forth, but they just can't understand why it's not worth. And you say, yeah, I'm walking away from you. And at that point, they start, well, why? Well, why? Well, show me why. And then I give them reasons onto why it is.
Yeah. Listen, the residential market, it's tough because not only do you have all these people that refinanced into 3% notes a year or two ago, but then you have guys like
I'm
Jeff.
Guilty on that one.
Yeah, you have guys like Jeff Bezos and Mark Zuckerberg or Elon Musk that are buying tens of thousands of one-family homes throughout the country, right? I think Elon Musk just bought like 50,000 one families out west, or 100,000 one families. So that
Blackstone's doing the same exact thing.
So they're all out of the market now. So you have the regular people that are never moving because they can never fathom spending more than 3% on a mortgage in the future, and then you have now an entire group of homes, percentage of homes off the market that'll never be sold again. You know, they're going to be strictly rental properties.
And
it's a big problem.
And the main reason, and I'm seeing a lot of this, and the main reason that these companies and these folks are buying it. Like, for example, like BlackRock, they bought probably a city in Florida. They're buying tremendous amount of property. Why? Because the average consumer can't afford buying a home. So what are they going to do? They're going to rent.
That's right.
Yeah.
So they have the upper hand. Obviously, it's BlackRock and Facebook and Moss.
And
so
what happens? So now what happens when the buyer had that down payment, can't buy anymore because the rates are too high. They can't afford the monthly payment. They become the tenant. No problem. But now this money, this down payment's burning a hole in their pocket. What do? They go out and buy the car. They have to furnish the house. They go on the vacation. And now they burnt that little nest egg they have. So what happens? They become renters now forever.
I don't know how, if you're a nurse, and I mean, if you're a couple in New York City right now and you make $250,000, $300,000 a year, right? You have no help from anybody. $250,000, $300,000 a year. How long is it going to take you to save up for a down payment?
Mm-hmm. Especially when you have to come up with 30, 40%.
Now they want to.
I mean, on a residential.
There's there's QM loans, non-QM loans. There's a whole bunch of other different loans, but it's hard. It's hard,
especially when a starter home is what, 800,000 now.
Yeah,
a starter home we'll call it. I mean, semi-attached houses, like for example in Staten Island, that used to be 400,000, right? And that's a good story. Somebody bought it for 400,000. They were able to afford it. Now they were able to sell it for 700. Now they bought something for 900 in Jersey. That's a beautiful thing, right? Especially for a residential mortgage guy. That is a dream client.
Mm-hmm.
That's How are you doing that now if you're getting started? I don't think it's possible.
Because they have to have $1,500, $2,000 worth of car payments.
All right, so that creates lifelong renters.
Yeah.
Which is not a bad thing,
not
right?
necessarily. No, not at all.
There are people that are just comfortable renting, right? And they feel like it's a lot better, right? Which it is, right? Because you have no landlord responsibilities. If there's a leak roof,
absolutely,
you make a call. If there's plumbing issue, if you need to hang something up or anything up, there's no issues. You call mains and they come and do it.
I've owned a house since I'm 24 years old. 2 years ago, I moved to Manhattan. I became a renter. Now I understand why these super wealthy guys rent.
Yeah.
It's just super convenient. You're in these spectacular buildings, but what are they doing? They're smart about it. That down payment, let's just say they were going to buy a $3 million house, and it's $1 million down payment. They're taking that million. They take that $1 million, they're putting it to work, whether it's in their business or in another piece of real estate, or they lend it, put it on the street, and the money they're making from that $1 million is paying the rent anyway.
If you can keep that discipline,
yeah,
that is without question the better better move.
This is what I've been trying to preach to folks every single day.
If you can stay disciplined.
You have to be,
85% of people go and get a $2,000 car payment.
That's right.
Because they have to keep up with the Joneses, right?
Yes,
I mean, that's just really what it is.
Yeah.
Yes.
If you can maintain, if you could put your money to work,
Yes.
and you're getting, like anywhere else, 15 to 20% return on your money, overall, S&P has been only returning 8% per year. What is that?
Yeah.
Right? I mean, that's nothing. So you're putting your money into S&P, you're putting your money into the bank, sitting in the bank account. And guess who the winners are? The banks, because they're taking your money and borrowing 10 times against that with the federal government, taking that money and then lending it out at an 8, 9%.
Yeah.
So the problem is if you're not utilizing your funds correctly, like you said, taking your money, putting it into real estate, putting it into your business, making your monies grow, then you're falling into the trap. You're falling into the, trap that everyone is kind of pushing everyone forward.
Yeah. The agenda.
So we're in an industry, I mean, I guess all industries are like this, right? But we're in New York City, and we're in an industry that's changing all the time, right? What's happened in the last 2 years, I mean, it's crazy that rates did go from what they did to what they are now. So speaking of trends, right, there's a couple things that stand out to me. Cannabis. Everyone's been talking about cannabis for the longest time, right? Now it looks like they're recommending to go Schedule 3. Maybe that changes things on a federal level. But right now it's obviously not allowed on a federal level. With that said, there are a lot of licenses coming out on both medical and recreational side. I have gotten no less than a dozen calls in the last 3-4 months of people that have gotten licenses or on the way to getting them, and they need to identify space. Okay?
I don't blame you.
So now you're a landlord, and you have somebody that expresses interest to do a dispensary. From what I understand, there's some hurdles with financing. Either maybe you can't have a mortgage on the property, or you won't be able to get a mortgage on the property. What has been your experience with that? What would you suggest to landlords overall?
So cannabis is the new trend happening right now, right? That's like where everything is happening. Unfortunately, like you just said, from a federal level, we're not there yet. From a state level, we're there. It's approved, but not by county level. So you can have a state level where you're approved and you get the license to do that, but the counties, the individual counties, supersede all the state laws, right? So when you're coming into the county and they give you an approval or they don't, you can put in your product, you can sell your product if you get that county approval. But don't forget, banks, federally chartered banks, are not allowed to do anything. So if you're planning on getting a loan from a bank, from an actual bank, a community bank, a regional bank, you're not getting it because they're not comfortable as of yet. So, and if you have already a loan and you have a tenant coming to you saying, hey, listen, I want to put in some cannabis, forget about it. Don't even do it, because it's a restriction in your loan docs, and it's a covenant in your loan docs that if they find out or they see anything, it's an automatic default. Now,
unbelievable.
It's a problem. I've personally seen it. I've personally seen landlords do that because it's added value, and these cannabis tenants are paying premium. So if you're asking for 20 if you're asking for 20 a foot, they'll pay you 40 because there's so much money. There's so much money there. They just don't care.
I had a deal, shopping center, 50,000 square foot shopping center. Dispensary expresses interest in 5,000 feet. Right? I spoke to you about it.
Yep.
They were going to pay, the asking price on the space was $25 a foot, triple net. They agreed to pay $25 a foot, triple net, as is.
And they probably didn't negotiate. Did they negotiate on that?
No. After speaking with you and sitting back with the landlord, he said, honestly, at this point, it's not worth it. Other tenants are not going to be comfortable. Maybe it's a financing issue. If we go to refinance, we go to sell. So I go back to the tenant. I let him know that. And he says, I'll double the rent.
See?
I'll pay $50 a foot.
See?
Wow.
It's insane.
And we at that point, you have the conversation, and you're like, it still doesn't make sense.
It's not work. The risk isn't worth the reward.
Exactly my point. But look, there are bridge lenders that are willing to do that, right? Because they're not governed. It's their own fund. So it's a fund of a fund. So they're able to do that. But don't forget, at the end of the day, you're going to want to cash out. You're going to want to perm. You're going to want to perm out. You're going to want to sit back and collect. You won't be able to do that. Right. It's a quick hit. Is it worth it? It's not. Yeah. Right? That $quick dollar is not worth it.
Especially if it's a cap rate deal in this case, right? If the lending options are slim, a smart buyer, especially this asset's going to be over $10 million, is going to negotiate based on that.
100%.
1% on that is could be hundreds of thousands, if not millions of dollars, whatever that comes out to from a cap rate standpoint. I mean, it's just not worth it.
And don't forget that the buyer who's buying that with that the actual shopping center is gonna have a hard time finding financing anyways. So he's gonna ask for reductions in price point because he's gonna say I can't get any financing because of that tenant.
Right.
So it's a revolving door.
I want to talk about two other trends that actually affect my world with the architecture side. New York City, relevant in New York City, and echoing dispensaries. What about these smoke shops, right? On every single corner in New York City, you have a smoke shop. Yep. And in those smoke shops, they're selling illegal, drugs. Let's just call it, even if you want to call it marijuana. They don't have a license to sell it.
Correct.
New York City just came out with a law that says the landlord could be fined if he rents to a smoke shop who's selling things that they shouldn't be selling and they don't have licenses for. And I got to assume this is against their mortgage terms and conditions as well.
100%. 100%.
So,
any illegal substance is an immediate default.
Right. So now you have landlords who may have rented a space to a legitimate smoke shop, signs a lease. The smoke shop now on their own decides to go above and beyond, now selling things they're not licensed to sell, and then the landlord gets penalized. A mortgage calls in the note, and the whole thing falls apart. And we all know in New York City, you're not evicting anybody either. So you're in a lose-lose situation as a landlord.
I might just start targeting those properties.
Okay.
Have those.
Let's go one more. Airbnb. Last week.
Big one. Big.
Wow.
Okay. Last week, Airbnb's
I've
officially
been saying that forever.
Legislature. Boom.
I've been saying it
no more
forever.
Airbnbs in New York City.
How
many mortgages are going into default because they can't
coming,
Airbnb no more?
It was coming.
It was coming a lot. And here's the thing. I feel like New York is just like they're making it difficult for anybody to do business.
Any business.
Like, why is it so hard for us to do business? Why is it so hard for us to lease things? Why is it so hard for us to operate?
We pay the most taxes. We're in the most expensive city. Our roads are atrocious. I mean, it's not safe. The homeless problem is out of control. The migrant situation's out of control. And yet we can't conduct business here anymore.
On an engineering,
and yet we're still doing it.
On an engineering background, every day I'm on that BQE going over the overpass, and my car is shaking. My ass is bouncing off my seat. The BQE
but they've
shaking.
been renovating. They've been renovating that for 10 years.
No. My dad is 60 years old. He said when I got my license, they have been doing construction on the Gowanus since that day.
Right? What was it? I-95 in Philly? The whole thing collapsed?
No, I didn't know.
Where was it?
It was in Philly.
Yeah, in Philly. The whole I-95 collapsed. Like, how could that not happen to me? Poor me. I'm going to be on the BQE, and I'm going to be the guy that the whole thing collapsed down 200 feet. I'm going to die.
It's honestly, it's insane. And to that point where you were saying that, so we have a shopping center in New Jersey, in Mattawa, New Jersey, and we do have a smoke shop in there. So what we do is we put certain language into our into
your
our
lease with him.
Right. So if we find out of any illegal substances, they agreed to pay us for the full 10 years. So whatever your yearly lease
pay
is,
in full and get out.
Pay the full 10 years that will take you to court,
and
you agree to do that. If these smoke shops, because we're seeing the trend that they're trying to sell marijuana in these smoke shops. So we put these covenants in there in order to really protect us. But they're a great tenant. They pay their bills on time. They have great product. They're always busy, and they always drive traffic. And that's important to me, as a landlord and as an operator as well, is to drive traffic to the center. And they're a great tenant. So I would love to have them in all of our tenants. Just put in certain language in there to protect yourself.
Right.
In the event that they do something and they get a little excited, they know that if they do that, it's 10 years worth of lease payments in one shot to us.
Wow.
So
okay, break down the timeline. The collapse of real estate in New York City due to the ban of Airbnb. It's September of 23. How many months go by before default loans?
Well,
3?
So are you assuming that there's just countless people with that business model?
I think that there's a tremendous percentage of people in the Airbnb space. People bought buildings with the intent to Airbnb.
Really?
So let's assume it's 5%. I mean, is that a big number?
He would probably know better than me. I don't know. I don't know that many people that have done it in New York City. I know a lot of people that have bought maybe a place in the Poconos or things along those lines. I don't know anybody that's done it in Manhattan especially with condo buildings and stuff. Maybe they have. I don't know.
Yeah.
Majority of the lenders don't even like the fact that you have Airbnb, right?
It's a liability.
It's a liability,
It's
like anything
Ubering
else.
your car. That's why you're not allowed to do it.
Right.
100%. So if you speak to a lot of these lenders, they already don't like the fact that you're doing Airbnb. I personally had a colleague of mine who had 8 units. He leased it out to a master Airbnb guy, right? So that guy, he's just a premium host, right? So he took that and he turned the entire property into Airbnb.
Yeah.
The bank does their searches. They're not dumb people.
Right.
They go on their search. They hire people to do searches. They went online and they saw that he was doing Airbnb. They called him and said, "We know you're doing Airbnb. Take it off." He didn't take it off. He said, "Why? I'm getting a premium. I'm paying the bills. I'm paying the mortgage."
Right.
A month later, the default letter came.
Wow. It happens that quick.
A month later, they came. They do not like this Airbnb model.
So, you guys just made me think of a really great story, if I may. My buddy Anthony Volpe is a realtor, pre-real as well.
Yeah.
It's his bachelor party, Scottsdale, Arizona. Right, so we go.
Great
rent
spot.
this unbelievably sick house. We rent this unbelievably sick house. Right, we get there. It's literally, I think 12 of us, 16 of us guys get out. Ready to have a great time. We get there. There's somebody standing at the door. He's like, "Listen, I don't. What are you guys doing here?" He's like, "What do you mean? We rented the house." And he goes, "No, you didn't." What do you mean? I don't follow. He goes,
Right.
Are you serious?
"I don't know who you rented it from, but it's not me, and I own the house." I go, what are we missing here?
Right.
So, long story short, somebody comes in, rents the house on I guess they rented it on like a 6-month level or something like that.
Okay. Long-term lease.
Start subleasing, which they leased it to us. They stopped paying their rent months ago. Now they're collecting money from these tenants. Now this guy finally, I guess, got the city involved, whatever it was,
Right.
and they stopped us at the door, and we're like, "So what do we do?" Because we already paid. Fortunately, we told Airbnb what happened. After a week or so, they wound up giving us our money back, and luckily this guy was nice enough to let us just basically match the price and let us stay there. But
wow.
This could have been really bad.
Sure.
Yeah.
We got there like, what?
Right.
But that's a trend that's happening a lot, especially in these cities like Scottsdale and Austin, Texas. I hear it's been happening a lot.
Listen, there are city programs that will rent you, let's just say, rooms.
Yes.
So there are people out there renting. Okay, I'm going to rent that 3-bedroom apartment, and then they're keeping it empty, and then they're going to sublet it to the city program who rented out his rooms, and the guy makes money on it. It's a lot more prevalent than we think.
Airbnb is a very profitable business. There are a lot of scammers that will go and they'll copy your page or whatever the case is and put it on their page. They don't even own the property, but you're dealing with that individual, right? And you just paid to somebody. That's exactly what's happening. So there could be a lot of incidents happening, right? But it's a very profitable business. I know that Airbnb lobbyists have been fighting for it, but the city is losing on so much taxes. But the hotel industry is fighting this because they're losing out on so much business.
Rightfully so.
Yeah.
So much business.
Think about it being a hotel operator, what this has had to do to you. They've already gotten hit. COVID. There's so many things they've gotten hit with. So many of them are union operated. And then this happens.
Yeah.
I don't blame them.
I know, but what's the difference between the taxis and Uber?
100%.
And Uber won that argument. So it's tough.
It's a good combo. I didn't think of that.
You know what I'm saying?
No,
Listen,
no.
you had a medallion license to be a taxi. You went through all the licensing. You paid money for it, and overnight they devalued the medallion overnight just for Uber.
It was $1 million to it being worth like 125.
Yeah,
right.
Yeah.
That's a great comp.
So it's hard to fight it.
I don't disagree with you on that end. What I'm thinking was on the hotel side, and like you just said, COVID, it destroyed the hotel industry. There are hotels right now that are turning into homeless shelters, right? I'm talking about quality hotels that they're turning into homeless shelters. That's not what you want. You don't want to go to let's say Madison Avenue on 50th Avenue, right on 50th Street, and you see a homeless shelter, which is a hotel. But that's what's happening. In order for these hotel operators to survive, they have to think outside the box. They have to do these things.
Yeah.
So they're doing the city programs, which is bullshit.
Now,
the problem is the homeless problem in New York City is another whole issue.
Yeah, we don't even want to get
that
involved
needs to be
in
under
that.
control.
Yeah.
The migrant one is another one. So
10,000 migrants a
So
month?
I've heard the stats. Have you actually heard how much they're willing to pay the city?
Yeah, they're paying
it's
top dollars.
From what I understand, and I've heard this now from 2 or 3 people, $265 per day. But you can
per migrant.
Yes, but you could put more than one in a room. You could put as many as 3 or 4 in a room. Which, if you actually do the math on like a 6 family, it's like $1 million a year.
Nuts. And then how do you evict them? I can't evict
Never.
legitimate tenants I have in my
You can't.
building.
Not in New
Never.
York.
It's a complete disaster.
From an operational perspective, this is the main reason that I don't purchase multifamily in the city. I don't say single family. I'm just saying multifamily in the city. Because
I agree.
there's
2 years ago, I pulled the plug.
so much restrictions. And once again, they don't allow you to breathe. They don't allow you to
You're
do
not
business.
running a business, right?
Yeah.
They don't
Can't run
just
a business.
allow it. That's
Yeah.
why, there's so many other states. This is why, we buy in Florida and Georgia. We buy, unfortunately, in the red states, which are landlord friendly. Not only because we're buying in these states, is because we're also paying taxes. We're also paying for all these things. We're providing a lifestyle. We're providing a community. So why limit us on how we do business?
New York City is not the greatest city in the world anymore.
They should. I know. We used to say all the time, right? So nobody's ever uttered the words. I wish I never bought that piece of real estate in New York 20 years ago. Maybe
100%
until now.
Yeah.
Maybe until now, because
Unbelievable.
things are definitely changing.
Valuation will never die in New York. That's one place that you can invest in. But you're gonna go through a hard time. You're gonna go through a very stressful time. Taxes are always gonna go up. They'll never give you a discount on taxes. You can try to grievance for your taxes. You'll never get it.
But it's not just the taxes; it's the bureaucracy along the way, adding things like on the residential side, right? Annual bed bug, annual lead inspections,
Yep.
DHCR reports,
I think it's
gas
I
and
think
annual
it's
gas
turning
inspections,
now. This new
annual
local
boiler
law stuff. This is. I don't know
Unbelievable.
we come back from this.
How do you keep up as a landlord paying all these extra things that you have to pay, all the new laws? Russell, we can go long for this.
I'm
Before
here.
we wrap up, I got it here. You're in business a long time.
Yeah.
Give us some wild, crazy, funny, ironic. Tell us something
Common story.
a
something
story that
that's-
happened to you regarding this business that happened in your career that stands out, that you're like, I can't believe this just happened.
Okay. All right. Well, here's this. I get these calls every day. It's funny because I get these calls all the time. I get guys calling me and asking me, hey, I want to buy this property, but I want to do it 100% financing. I don't want to put any money down. And I'm like, hold on a second. Do you understand where we are right now in the market?
Yeah.
Do you understand where we are with rates and the fact that there's a default rate of all-time high? He's like, yeah, but the performer model, I'm doing all of that. I'm like, guys, please. There is no 100% financing anymore. It doesn't exist.
These are seasoned guys.
Yes, this is the guy that we've been working with, but because he's looking at a performer model, he thinks the banks are going to do it. I'm like, guy, you're getting 55 to 65 LTV. It's time to put in the money. So please, no more 100% financing. I don't want to hear that.
What was that a year ago or 3 years ago?
80%, 85%. You can get that. You can get these kind of financing. You could possibly get 100% financing if you're really in a certain market, in a certain time, right? Every market is different, but those were like special situations, right? So no more 100% financing. You got to put money into your deals. If you don't have capital, if you don't have equity, don't buy anything. It's just not. You have to invest now into your property. It's not as funny as you probably would want, but the point of the matter is that people still think they're getting 100% financing.
It makes perfect sense. Absolutely.
Yeah, completely delusional.
Still think they can get 100% financing. If I can tell you, I probably get a call because they're doing so much value add. They're still doing the value add business that they're thinking they're still getting this 100% financing. I get calls every week on something like this.
Unbelievable. Crazy.
So
this was a really good episode.
Yeah. Thank you so much for coming in, man.
Here.
Of course,
we're living in a crazy world, boys. It's unbelievable, especially here in New York City.